Good morning. Welcome to our weekly charts of the week here for the ETF Bulletin. I am Matt McCall, editor ETF Bulletin, president of Penn Financial Group. Today we're going to go through six quick charts, taking a look at heading into the basically first full week here of the second half of 2013. Some interesting charts out there, so let's just jump right into it. We're looking at the PowerShares US Dollar Index Bullish ETF. UUP is a symbol. This basically is long the US dollar index. As you can see, the US dollar index got hit pretty hard in May into June and then bottomed at a multi-month low. Ever since the Fed came out and talked about tapering, you can see exactly what happened in US dollar. I think longer term, yes, the US dollar will continue to move higher. Not because I love the US dollar. It's because you take all the currencies out there. You take the Australian dollar getting crushed. You take the euro in the European zone. You give it an okay status. You have the yen, which is getting hit because the Bank of Japan. So everything leads back to the dollar moving higher. This is the yearly chart. We're about to break out to a new about 11-month high. But here's your longer term chart going back to 2008. Still a lot of upside here in the US dollar index. Maybe something to keep an eye on, especially as a hedge against the market. Let's take a look at the financials, the XLF. As you can see here, it came back very nice. Bounced right here recently off the 50-day moving average and then exploded from there. That's always a very bullish sign with me. Closing at a 2-week high on a high of the day. Keep an eye on the financials. If this market continues higher, the financials will definitely lead this rally. Consumer discretionary, another area that is interesting. It's a little bit higher beta, so it's going to be more tied to the cyclicals and how the economy is doing. As you can see here, closed at a new high, closing at this level just above the previous high set back in May. This is going to be some of the stocks that you think of that you really, the purchases you don't need, discretionary as it says. But again, retailers have done well, consumers remain strong, and look at this rally that we've had here, 8 consecutive days. Look forward to consolidate around 57 to 58, but it looks like this ETF is ready to continue to break out. Moving overseas to some areas where there's been some conflict recently. The Egyptian ETF, Market Vectors Egypt ETF, big rally after all the riots that we've seen. Morsi getting tossed out, looking for a new prime minister right now. But it appears that we're going to see some of the action here in Egypt this morning probably pull back a little bit. As there's been quite a few deaths overseas just on Sunday night here in the United States. So let's keep an eye on EGBT. Not recommending buying this, but just one to keep an eye on. And then, of course, the country it started the issues over in Europe, the Greek ETF, Global X FTSE Greek 20 ETF. What I see here is forming a bottom. So it is forming a double bottom. Some good news over the weekend about the Troika and Greece well on its way to doing what it's supposed to be doing. Not great by any means, but on its way. You may want to watch this level. If it can hold 14.5, you may see a rally on GREK. Very aggressive, but you may want to keep an eye on it. Last but not least, bonds. Bonds got crushed on Friday as the 10-year yield spiked to above 2.7%. Here's the long-term TLT. I've been saying for well over a year, if not more than years, stay away from this because you can lose money in bonds. People thought, no, you can't. You can't lose money in bonds. How many advisors were putting you in bonds? Well, look at this, down 15% in the last year. Stay away from U.S. bonds right now. As far as our income ETFs are concerned, we're going to update those throughout the week. But keep an eye, again, you do not want to be in U.S. bonds. Interest rates are going to inevitably move higher. You want to stay away from them. Okay, again, this is Matt McCall, editor of the ETF Bulletin. Charts for the week. Have a great day.